would like to also thank you, the 25th Capital Link for giving us the opportunity to present this very interesting panel. Our subject matter is upgrading the infrastructure and transport network in Greece, investment opportunities. So I believe that we have the perfect mix in terms of panel members. And I would like to just briefly introduce our panelists today. Christos Ioannou is the representative of AVAX, executive chairman, one of the major construction groups in Greece, listed on Athens, and also active in real estate and tourism. Mr. George Mylonogiannis, he's the CEO, the chairman of the BOD of ELLAKTOR, one of the most traditional groups, infrastructure groups in Greece. Mr. Sachinis, he's the CEO of EYDAP, the incumbent water supply company of the broader Athens area. Ms. Penelope Lazaridou is the general financial manager and executive board director or board member of TERNA group of companies, one of the major Greek infrastructure groups. And Mr. Manolis Sigalas is Senior Vice President and Managing Director of Europe, Hill International, multinational with presence in various countries and mainly active in project management. So just opening the statement, it is a very positive momentum, I would say. Greece has come a long way in the recent years, overcoming a deep economic crisis and having made significant progress towards reform and recovery. The Greek economy has grown steadily. We heard that the GDP grew at the rate of 2.8 in 2022 and 2.4 in 2023. The public debt has steadily decreased from 160.8 to the GDP to 141.2. It's expected to decrease in 2027, while at the peak of the crisis, the rate was 205. So we see that it's a very positive momentum. We have a world record debt reduction, coupled with the investment grade, which has been granted by 3 out of the 4 recognized rating agencies. So I think that it is a great moment to see what needs to be done to better improve our network, transport network and infrastructure network. So I would like to give the floor to Ms. Penelope Lazaridou and ask Penelope, TERNA is currently reporting an order book of 10 billion, whereas the country's pipeline of infrastructure projects in Greece is estimated to exceed 30 billion for the next years. Evidently, this project spree will continue having a positive footprint on our economy. However, what would you say that is the environmental and energy angle of this portfolio projects?
First of all, I would like to wish to all of you happy holidays, to you and your families. Thank you, Nico, for this question that touches upon contemporary pivotal issues for all next generations in our country and abroad as well. Let me start first saying that indeed, during the last decade, a significant part of the country's infrastructure budget was transportation intensive. Greek infrastructure companies delivered some of the most iconic motorway projects, such as the minister mentioned, Ioannou Οδός, Central Greece Motorway, Olympia Οδός, that were added to the existing motorways of 𝒂𝒂𝒕𝒊𝒏𝒈 and Attiki Οδός. The country's pipeline contains more emblematic infrastructure transportation projects like Attiki Οδός extension, the north axis of Creta, the upgrade of 22 regional airports in Greece, development of new airports in Crete and Kalamata, which are expected to propel economic growth. But all new transportation infrastructure projects are designed in a way to be environmentally sensitive. Why? All those projects, they reduce travel times, they reduce congestion, leading to a more efficient fuel use and reduce emission per vehicle. I would say that they invite more environmental friendly modes of transportation through a charging network for electric vehicles and implement sustainable practices in line with international best practices such as pavement recycling and green energy for electrification. And about the new airport, the energy consumption reduction and minimal carbon footprint is a strategic target. But as you very correctly pointed out, new infrastructure projects should address new challenges, which are the climate change, the water shortages, the energy shortage, and the eco-friendly transportation. We have an increasing frequency of climate phenomena, which underscore the urgency of adapting our infrastructure. So these projects are crucial in steering our economy towards a more environmentally and socially responsible direction. Some of those projects, which are the most critical infrastructure related to climate and eco-energy already contained in the country's pipeline, are irrigation projects. With a budget of about 2 billion, will contribute to the efficient management of water resources, optimal utilization of rainwater and agricultural land, and also, furthermore, integrated flood protection with the development of hydroelectric stations, particularly pump storage ones, provide renewable energy and bolsters flood defenses as well. Benefits of desalination of the Greek islands. Advanced desalination plants also align with environmental sustainability, as they can be powered by renewable energy sources, reducing carbon footprint and preserving the natural beauty of our Greek islands. Also, the close cooperation between the public and private sector, but in the form of PPPs, is crucial for the timely upgrade of the Greek rail network that will definitely enhance national connectivity and also will reduce the environmental impact of transportation. In sum, these infrastructure initiatives are not just construction projects. They represent our commitment to a resilient, to sustainable future, balancing ecological sustainability with economic value. Also, there is an interesting angle of this project, which is the level of innovation and out-of-the-box thinking required to engage in the formulation of the national strategy, generating internal value for all our country's stakeholders. In this regard, during the last few years, major infrastructure companies in Greece have been investing heavily in soliciting people with the necessary scientific credentials and professional experience to enable and lead this project that address new climate and energy challenges. For us, there are additional tailwinds to this endeavor. Greek economy has been assigned an investment grade rating from 3 out of 4 accredited rating agency. Greek systemic banks are totally out of the woods with rock-solid financial seats and robust results, showing a strong appetite for credible investments, but for credible sponsors as well. Greece has earmarked a significant amount, only 52 billion is coming from RRF and from ESPA, from EU to fund digital, environmental and energy transformation. Greek government also has a clear and strong mandate and a full turn to act. And foreign institutional and foreign sovereign funds have Greece on the center of the investment radar. So it seems that the stars are aligned, presenting Greece with a monumental opportunity that we simply cannot afford to wait, not for ourselves, but for the generations to come. Thank you very much for your attention and patience.
Thank you, Penelope.
Thank you.
Thank you for your presentation. And I would give the floor to Christos now. So, Christos, with a record level of contracted work in Greece, the market as well as a flurry of upcoming work, what would you see as the challenges faced by the contractors to ensure that you deliver successfully and in time the projects?
Thank you, Nico. I think there's a very broad discussion about the lack of human resources, financial resources, and the supply chain constraints. But I think I wanted to talk about this from a different angle. I want to talk about how the relationship between the client and the contractor needs to be revisited to achieve success. Projects cannot afford the luxury of an antagonistic relationship between client and contractor. And in contrast to popular belief, I think their interests are very much aligned. In terms of time, it's obvious that the client wants to get his project faster, but the contractor also needs to get the project done and move his limited resources elsewhere. The longer projects drag on, the worse it is for us. And in terms of money, this may seem counterintuitive, but it is in the client's interest for the contractor to have a healthy profit margin at market levels. When a contractor suffers financially on a project, the project delivery also suffers. And nowadays, the projects are structured in such a manner that the profitability is broadly visible of the contractor, so there's a limited risk of excess profitability. So, against this backdrop, I believe the following 4 levers can contribute to successful project completion. The first is teamwork. Client, contractor, and project manager need to work as a team towards a common direction. And a key element of this is starting off very early on for there to be realistic time and monetary budgets. The second is transparency. The contractor needs to take extra care to be transparent and open, gaining the trust of his client, and at the same time making sure that the cash received from the client flows smoothly downstream to the suppliers and the subcontractors. The third is timely and fair payments. The worst thing a client can do is to weaponize the monthly payments and aggressively reduce the valuations and delay to pay. At the end, this will be to the loss of the project and the client. And the fourth point is quick decision making. The client needs to have a sense of urgency, avoiding bureaucracy. This may sound a bit sort of theoretical and wishful thinking, but in my experience, where AVAX has completed hundreds of projects and is now faced with a record signed backlog exceeding 3 billion euros, I have seen that when we complete a project, either both or neither of the client and contractor are happy with the outcome. And this takes me back to my point about the aligned interests. So I would like to close with 3 examples. With the Stavros Niarchos Foundation hospital projects, the collaboration with AVAX started from the very beginning at the bidding phase. With an innovative approach managed by Hill International, we sat down as one team and reached what we all agreed was a fair contract price and realistic time schedule. And the construction has recently started on these projects. The second example is with Lambda Development for the Ellinikon Phase 1 infrastructure project. Here the collaboration started a bit later during the construction phase, and we were already seeing positive results. Finally, I also have a positive example of this collaborative approach from the public sector. When Minister Karamanlis was appointed as Infrastructure Minister in 2019, he made it his personal goal for the Metro Line 3 extension to start operating within 2020. This seemed like a huge challenge at the time, but we worked closely, openly, and collaboratively with the Ministry and the Metro Authority towards this common target. I am proud to say that in July 2020, at the peak of the pandemic, Prime Minister Mitsotakis inaugurated the new Metro Line 3 for commercial operation. On the flip side, we have the Thessaloniki Metro, which was contracted to one of our competitors in 2006. 2006 was the year that my 3rd daughter was born. Let me say that she's turning 18 in 2 months, she's about to go to university, and as we speak, the Thessaloniki Metro is still under construction. In any case, I hope these insights are useful, and I would also suggest the current ministry to adopt this collaborative win-win approach for its upcoming challenging projects including the Metro Line 4, which our company is constructing. Thank you.
Thank you, Christos. That was really helpful for all of us to understand the key parameters of ensuring good delivery of projects. So I would give the floor now to Harry Sachinis. Without, the water supply, no community can be operative. So, Harry, as one of the major stakeholders in this area in Greece, could you tell us what is in the pipeline as regards water supply and related parameters?
Actually, first of all, in order to put this into perspective, I want to talk about some of the significant changes that are happening in the water and wastewater environment in Greece. The first one is a regulatory change. For the first time in Greece, there's going to be an independent regulator regulating this industry, and that is extremely important. The regulation is going to work exactly the same way it is working in the energy industry. It is going to be a RAB-based tariff for that regulation, so a regulated asset-based tariff. This is a major change on how the industry works. The other thing is a structural change, that now everything that has to do with water, wastewater, and energy, because in order to get water you need a lot of energy, is now finally under one ministry, and that is the Ministry of Environment and Energy. So you have a symmetry here. You have a regulator who is a regulator for water, wastewater, and energy, and the ministry in symmetry that is responsible for all these areas, which is really great because you have a simplification of the stakeholders and decisions can be made much faster. Additionally, the Ministry of Environment and Energy is proposing a new law that has already been discussed in the government, and we believe it's going to pass sometime in January or February, that has to do with economies of scale across all of Greece by merging all the 170 plus smaller water utilities in Greece across the 13 regions in Greece. So that's again very important because you'll have the economies of scale, but you'll also have a better plan for investing, and there are going to be many bigger investments that are going to come out of that, I believe. Along this, both EYDAP, which is a listed company, and EYATH, which is the company in Thessaloniki, are going to benefit because their areas are going to be expanded, in our case, by about 10%. So that's going to be another interesting evolution for at least our company. Now, having painted this background and the changes in the regulatory and governance environment, we have to figure out what are going to be those investments. So across Greece, but especially for us, there's going to be a need to replace old water networks, to replace old wastewater networks, and you have to do that because in England, for example, and this is England, not Greece, in England they had environmental issues because of their old networks for wastewater that they hadn't invested in, and they had sewage going into the rivers, so there were significant environmental penalties to the companies for that, so we need to avoid that. You have new European Union regulations regarding the quality of treated water from wastewater, and those will need significant investments to achieve that quality. We have to think about resilience to climate change, and again, that's a multidimensional issue because my company was threatened by fires in the last several years, but we managed that. But again, we need to figure out how we will manage that in the future. You have, at the same time, just this year, 2 weeks after the floods, after the fires, we had floods in Volos, which really destroyed the water network in Volos, and it took them, and we tried to help there, but it took them a couple of weeks to bring the network back. So we have to figure all this, and then we also have to figure out what happens in the case of drought. because that's again a possibility. And as Penelope mentioned earlier, we have to think about potential desalination investments, not only on the islands, but even in Greece, or at least be ready in the case you need to have desalination projects to be constructed so that you can avoid issues that have to do with drought. And in the end, again, you have to look at how you can do that with lower energy costs or with cleaner energy, so there need to be investments in renewables. So I think you're going to see that as a need for investment across all of Greece, especially now that you're going to have those larger regional companies for water and wastewater. In the case of EYDAP, which represents about 40% of the population in Greece, we have a 10-year, €2 billion investment plan. That's quite significant. A big part of that is 900 million for developing a wastewater pipeline network, and also 3 new wastewater treatment plants in eastern Attica, where there is no such infrastructure right now. 90% of that is going to be funded, is being funded, because all these projects have started, and actually some of the companies represented here are the companies that are working on these projects. And 90% of that is funded by the European Union. Another 400 million euros is going to be to replace the old pipeline network in Greece, but also create new pipelines to bring water, for example, to the Ellinikon project, because you have there a city within the city, so you need to replan on how you assign the water and you bring water to where is needed. 200 million euros for additional wastewater pipelines, and about 500 million euros investing in the smart grid and smart meters, in our zero carbon goal to reduce the cost of energy, and some of the plans include pump storage as well. And also we're looking at new technologies and best practices, and for example at our 𝒂𝒕𝒊𝒏𝒈 wastewater treatment plant, which is the second largest wastewater treatment plant in all of Europe. Instead of us using the biogas to dry the sludge and then remove it to be burned by cement companies, we want to take the sludge and burn it together with our biogas to create electricity that can be sold, and then we can become actually net sellers of electricity than what we are right now, which we're buyers of electricity. So this is a demanding investment plan and challenging investment plan, because it ends up being tenfold to what the company has been used to. The company has been making about 15 million euros in investments every year, and now we're going to reach a peak of more than 150 per year. The question is, how are you going to finance all of that? We do have cash, about 320 million. There are the EU grants that I mentioned to you earlier, but I think those are going to be less and less. So we're going to look at bank loans. We need to make sure that those are going to be favorable ones. There, I think our ESG ratings that we're getting, and they're improving year by year, are going to be helpful. Standard & Poor's already rated us better than about 70% of the companies in our area that they're following, and we believe we're going to improve that more. We're going to look at green bonds and pretty much all of the ways that we can finance this. But again, the most important thing is to have the regulator in place so that we can ensure that the tariffs are fair tariffs that can actually pay for all the investment that is needed in this very critical area and industry.
Thank you very much, Harry. It's an exciting investment program for EYDAP, and I wish you good luck with your program. So I give the floor to George Mylonogiannis. When we were discussing, you were referring to some 3D factors and challenges in infrastructure and transport projects. So could you please elaborate on that?
So first, I have to thank you for the opportunity to communicate with such a prominent audience. Last year in the same panel, most of us were here, I think, in the same panel, I made an introductory statement by saying that we experience the decade of unexpected events. Unfortunately, I have to make the same statement today for self-evident reasons. We all know that there is another war that was not expected. And then the 3Ds that Nikolaos referred to are still here, and we do not refer to 3 dimensions, but to defense, to decarbonization, and deglobalization. And speaking for Greece, we have to add a 4th D, which is the development of real estate. So it makes sense to have a look and to examine on whether infrastructure investment is affected by these 3 Ds. Let's take things from the beginning. The first D corresponds to defense. Because of the last wars in Europe and now in the Middle East, we all know that defense budgets have been drastically increased within the European Union. You know that Germany has a 100 billion program for defense, and the question is to what extent such developments affect adversely all civilian projects and infrastructure investment. My answer is that, of course, there are funds directed to what we call pure defense projects, the manufacturing and the purchase of weapons. However, there is another part related to defense, which is very close to infrastructure, which is pure infrastructure. And I'm referring, for example, to the joint use of airports. In the United States, there are more than 20 airports of joint use, which means both civilian and military. The same in ports. So, at the end of the day, it is a challenge, a threat, because of the lack of funds, or of funds that are directed to non-civilian projects, but in parallel, there is an opportunity for the construction of constructions that have this double, let's say, role, civilian and military. Particularly for Greece, allow me to say that defense is not a problem, because we spend more than any other European country for defense equipment. Thus, our budget is there, and part of it may be used for the development of defense infrastructure. The second D refers to decarbonization. And again, we have to answer on whether there is a challenge, a threat, or an opportunity. Someone may say that the new needs for decarbonization, the Fit for 55, all these kind of things constitute a threat in the sense that now infrastructure projects have to take into consideration all these needs, and the cost is higher. At the same time, as the change in the climate is here, there are new projects. We have the example of what happened in Thessaly. We had the floods, totally unexpected, and now the need for the construction of new levees or new dams of another scale that we could have even imagined that we would use. So here is the opportunity. The last one, I think, it's a threat. And I'm referring the third D, but I will talk about the fourth when I come back to Greece again. The third is the deglobalization. That means that the circulation of funds is not that easy as it used to be, and especially for funds coming from the eastern part of the globe. However, I can say that Greece does not depend that much on such funds. And thus, we have lower problem than somebody could have expected. The last is the development of real estate. And for Greece, it's a major tool for the development of the country. We all know, and I had the chance to work with Manolis in the Hellinikon project, me as a lawyer and Manolis as a technical advisor to TAIPED for, I don't remember, Manolis, 4 years, something like this. And now we are very happy to see that the project is there, it is implemented. And we have, of course, the project per se, and in addition to that, the infrastructure, which is a condition precedent for the development of the project, as Mr. Sachinis said before. Allow me to say that our group has two major real estate development, one in Crete, in the former US bases in Gournes, and the Kambas estate in Attica, which by all means will need huge infrastructure works in order to be supported. So, to mitigate the risks and to exploit the opportunities.
Thank you very much, George. And lastly, I give the floor to Manolis. Manolis, as a representative of a multinational with offices in 42, if I'm correct, countries. What would you say that is your on-the-ground perspective and outlook regarding Greece's infrastructure sector going forward?
Good morning, everyone. Thank you very much, Mr. Koritsas. Regarding the outlook, and as a prelude, I think it needs to be recognized that Greece's efforts in recent years have yielded a tangible and measurable result for the infrastructure space and for the wider construction industry. Specifically, we have major projects, I would say some projects of global caliber that are currently underway, such as the Hellinikon, the Athens metro expansion, the new international airport of 𝒂𝒂𝒂𝒂𝒂𝒂 in Crete, the Stavros Foundation Health Initiative, and several more, with some impressive construction sites that are in full swing in different parts of the country. At the same time, we have an unprecedented pipeline of projects across sectors that can now be implemented and fueled by Greece's RRF program. We witness a significant M&A activity in our sector, largely part due to the fact that the big five Greek contractors have essentially tripled their backlog since 2019, and this continues to grow. The same applies to all market players. We all experience growth. The market is hiring and complaining that they cannot find people. So taking a step back, Greece has done something right. Circumstances for our sector are notably promising, and we remain a bit about the prospects ahead. Now, having said that, in this very positive big picture that I presented, there are some critical pixels that definitely warrant our attention, and this brings me to the challenges. And yes, challenges. There are challenges, and challenges will continue to evolve amid evolving global circumstances. And echoing the very valid remarks by fellow panelists, yes, we need to rationalize project budgets to be in line with actual market conditions. We need to maintain and sustain healthy and steady cash flow to the contractors and downstream to the supply chain to be able to deliver all these projects. But beyond that, given the demanding and the increased scope on the ground, Mr. Koritsas, we need to collectively step up our game. And the name of the game going forward, just to be clear, it's execution. And we talk about the execution capacity of a sector that very reasonably so, naturally, has been weakened in past years due to the prolonged crisis. And it's now been called upon to deliver an unprecedented, a historic capital expenditure program. And in the function, in the formula of execution capacity, a critical parameter is, of course, human capital. And the prospective problem that we all recognize and face is as things currently stand, is the lack of the brains and hands of the manpower to actually deliver, to timely deliver all these projects. And in this respect, we need to be mindful of that competition for resources is not in Greece. It's pan-European and it's international. There are other European countries with significant RRF packages. such as Italy. We have the Kingdom of Saudi Arabia planning trillions of US in investments, and it's drawing upon the same pool, the European pool of resources, including, of course, from Greece. So what can we do in this new landscape? I think Greece has manageable and workable solutions, given also its size and limited numbers. Regarding engineers and qualified professionals, we need to persevere in the repatriation efforts, making use of tax incentives that have already been provided. Can this be reinforced? Even better, but there are tax incentives. We need to offer better salaries and, importantly, a vision and a future perspective. And as a side note, this is not being done automatically through LinkedIn ads or platforms. This requires time and energy, and it requires taking action from the leadership of the organizations of market players. In addition to that, of course, we need to provide jobs to young engineers, to develop a new generation of professionals through these international projects with a different mindset and skills and experience that can be exported in the future. Now, regarding labor, which has been the elephant in the room that has been identified by all, regarding labor, obviously, an element of the solution is sourcing this partly from other countries, such as Egypt. To achieve that, this needs to be approached in an institutional and structured manner. Hence, a close collaboration between the Greek government and the private sector is absolutely essential to address an array of matters, including how many, what is their geographical allocation. We have Crete, Attica, we have the North Greece, and of course, unfortunately, Thessaly recently. Where are these people going to stay? Living conditions, specifications for these facilities, how these are permitted, and a range of topics. I don't want to take up your time. The point being, and the message is, that this discussion needs to mature, the solution needs to be shaped, and any legislative interventions need to be made as soon as possible, so the market, the private sector, we can get things rolling in 2024, and hence avoid the risk of experiencing a dip or setbacks in the progress of projects during 2025 and 2026. Notwithstanding, looking ahead, always with a positive mindset, and I genuinely believe that we have some very creative and productive years ahead of us. All of us sitting on this panel are, in different capacities, are involved with some transformational projects that are underway in our country, and together with the challenges, there are also opportunities that we can collectively seize for the benefit of the Greek economy, but also for businesses and professionals, our compatriots who operate in the sector.
Thank you very much, Manolis. Just as a wrapping up statement, I would say that we have an opportunity that is not to be lost. There are billions of euros mobilized to invest in upgrading the infrastructure and transport network in Greece. And with all the stakeholders here, personally, I am optimistic that we can do it, and that such investments in these core areas, they act as accelerators for general economic growth. Thank you all.
Thank you.